Welcome back. Time for the word on Wall Street. Top investors watching your money. Joining me right now with Bull Tick Capital Markets Chief Strategist Kathryn Rooney Vera. Great to see you both this Monday morning. Thanks so much for being here. Also want to get your take on what's going on economically, Kathryn. We've got the October Consumer Price Index coming out this Thursday. The expectations are a month-over-month increase of 0.7%, which is a big number. The year-over-year number is 8%, which is obviously off of the peak. It follows the Federal Reserve's fourth consecutive hike of 75 basis points last week. The final Fed meeting of the year kicks off next month, December. What's your take on the CPI and what that means for the Fed?
The Fed is obviously going to continue to hike 75 basis points this month. I think what we're expecting to see, in December, 50 to 75 basis points. But I find some encouragement in the inflation data. The Atlanta Fed publishes a sticky inflation index, which is certainly off of its highs. And if you do, as I do, expect an economic deceleration and a rising unemployment rate, we saw it move slightly higher in last month's data, then that also is deflationary in the sense that, of course, inflation decelerates. So that's the idea. I think we're likely off of the highs in terms of the biggest prints on the inflation front, as well as from Fed hikes. The Fed likely gets to 5% or higher. Unemployment, in my view, is going to surpass the Fed's forecast of 4.4% next year. I think it goes higher to the NARU, which is 4.9, even 5%. So we're going to get a rollover in the economy. Supply chain distortions have improved markedly. Used car prices are dropping. So I think that on the inflation front, things are going to look better.
I just want to pass on a comment from Paul Singer from Elliott Management. He says the world is on the road to hyperinflation and could be headed toward the worst financial crisis since the Second World War. This is Elliott Management, one of the world's biggest, as you know, and most influential hedge funds, Florida-based firm. Paul Singer manages, $56 billion in assets, warning clients in an extremely challenging situation, worst financial crisis since the Second World War. Real quick comment, Kathryn Rooney.
There's always a risk to some extreme event such as that. For inflation to move a lot higher and move into hyperinflation, we'd have to see a shutdown in the oil complex. We'd have to see a Fed that doesn't continue to hike and doesn't take inflation seriously. We'd have to see a real move to the downside in terms of a lot of things. So there's always a chance, there's always a risk. My suspicion, however, is the Fed is this time serious about getting inflation down. 4 times the target is not where they need to be, and they're concerned of it becoming endemic.
Thank you so much, Kathryn Rooney Vera and Michael Lee. Great to see you both. Have a good Monday.